Good afternoon and welcome to Nasdaq Trade Talks. I'm your host Jill Malandrino, global markets reporter at Nasdaq. Joining us at the market site in Times Square, we have Shawn Cruz. He's the manager of trader services over at TD Ameritrade with our midday update. And volatility, it might be quiet right now, but for now, Shawn, it's great to have you with us as always. And today, global trade optimism, pushing stocks higher, yields lower, yields higher, and stocks higher, yields lower, yields higher as well. So.
Yeah, we're kind of seeing a full-on risk-on trading going on today, and I think a lot of that is due to optimism over the global trade deal. And I will say, usually by now, a week or so ago, we started getting some pretty good headlines around progress on the trade front. Usually by now, things have fallen apart. We actually haven't gotten that today. We're actually getting continued confirmation that things do look like we're at least going to get a phase one. I still maintain my stance that that's phase one, which is probably the very easy items to get through. That's probably, I wouldn't expect that to run into too big of a problem. But phase 2 and 3, that's where things are going to really get interesting. And then you start to wonder if phase 2 breaks down, then do they just pretty much undo everything they got done in phase 1 as well? So that's the big risk to me sitting here. But from where markets are sitting at today, you're seeing bonds sell off, which is moving yields higher. And you're also seeing equities bounce back and forth between slightly positive to lower, but they had a pretty good day yesterday. So I think really what you're looking at now is, what are we going to hear for the rest of earnings season, and are we actually going to get this final part of at least phase 1 completed? I think that's what markets are waiting for right now.
Well, speaking of earnings season, they're good, not great, but better than expected because there was zero expectations for this quarter going in. I think maybe the only tricky thing could be guidance. We haven't heard that much of it. We haven't heard spectacular guidance, but not as bad as expected.
Guidance has been coming out neutral, not totally bearish, but usually what we're used to getting over the past couple of years is you come out, you get a beat on the top and bottom lines, you get a guide higher moving forward, or you get some sort of positive sentiment out of management. You've been really getting sort of this neutral, uncertain feeling from management. I think a lot of them are starting to realize that they can only kick the can down the road so far with a lot of their businesses. And if you don't really get some progress done on the trade front, it's really going to start to hit their balance sheets, hit their income statements. I think that's why management's really coming out sort of neutral so far this earnings season. But we're hearing in the numbers, still negative year-over-year earnings growth, but it's not as negative as we were expecting. So I think what investors are hoping for is that this is really the bottom, the trough, and then we start getting back into positive growth in the next quarters.
I would agree with you as well, but concerns me is that CapEx is just going down, 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 and that does not set you up for future growth.
It doesn't.
Right? And that's what concerns me.
Yep.
Our last point here, you had made averages, they hit new highs, right? But it doesn't mean all stocks are hitting new highs.
Yeah, and so if you look at, whenever you start to see averages hitting new highs, something that I think is a good exercise to do is go look and see how many of the components, say in the S&P 500 and Nasdaq 100, whatever it is you're saying hit that new high. Go look and see how many of the component stocks that make up that index are hitting 52-week highs or fresh highs themselves. And if you don't see the bulk of those components hitting those new highs, there's not really good breadth behind that move higher. So there's a little bit of a concentration, a few names that are really pulling the whole index up to those new highs. You want more breadth to feel really good about this being a sustainable, strong push to new highs, and we're not seeing that right now.
All right, let's wrap up with our chart here, of course, of the VIX. And when we talk about volatility may be low, for now, it's low, but like you said before, it takes one headline, it takes something with the trade deal to fall apart, and that VIX is going to shoot straight up from 1213-ish back to levels that we saw in August.
And that is something we've seen happen multiple times, not just this year, but also in 2018 as well. And that is where you see the VIX move lower, it starts to consolidate, and then something happens and we shoot right back higher, at least up to those high teens. So we did that once earlier on in the year in the spring. We did it once over the summer, and we're starting to see sort of a similar pattern forming here right now. So I think there is a little bit of a risk that something falls apart with trade, or it really be anything on the geopolitical front, and you're going to see VIX maybe not shoot up into the mid-20s, but it'll definitely move higher, I think, above 15. I would target somewhere around that 18 level, which would also, I think, coincide with equities pulling back from these highs as well.
All right, Shawn, as always, thanks so much for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.